Hi Bolovies, welcome to Community Living with your girl Malepo. If you're new to the channel, please remember to subscribe, and if you're stopping back by and just continuously supporting the channel, you know the jingle by now. So follow suit and sing along. Welcome back, welcome back, welcome back. So thank you very much to everyone that has subscribed. We're currently sitting on 710 subscribers, so please, if you haven't subscribed, go on and subscribe. Subscribing is free, but it helps the channel to grow, and at some point it's going to help us to get to a point where we can monetize the channel, right? So there are a couple of things that I want to get out of the way. So there's been quite a number of changes to the channel in terms of the content that we're releasing, the frequency of releasing this content, and so forth, right? So I just want to explain to you guys what has been going on, what has been like my thought pattern in terms of the direction of the channel and so forth, before we get into the topic of the day, right? So today we're going to be discussing savings, like different types of accounts that you can save in, and which purposes will you be using those accounts for, right? So before we get into that very critical topic that everyone has to understand before they start their savings journey, I think it's very important that I just explain what has been happening on the channel, especially if you've been like a day one, real one, you know, and you've just been supporting the channel, and maybe you don't understand, like, okay, why am I receiving notification every second day and so forth. So we're releasing three different type of content, right? So it's this type of sit down where I explain, and usually they're very lengthy, about 20 minutes long. Those who can watch all 20 minutes. Those who can't probably watch plus minus 7 minutes of what we release. And then there's Money on the Streets. That's another series that we're running on the channel that basically goes into the streets, right, and just ask random strangers about different financial topics, just to find out their knowledge of those financial topics and what they might be doing related to those financial topics, right? So that is Money on the Streets. And then the third ones are YouTube Shorts. So YouTube Shorts are 60 seconds long videos, or maximum of 60 seconds long videos, that basically goes into different financial topics. So far we've covered savings and we've covered budgeting. That's why I'm covering this topic of the different accounts that you can use for your savings, because we've introduced everyone to what savings is, why do you need to save, how do you save, where do you save, right? So I just want to get more into the details. So this is what these type of videos are for, to really go into the details so that you can follow whatever I'm sharing on this step by step and get to your goal, right? So basically, yeah, that's what I wanted to share with you guys, so that you're not surprised that you're getting like different type of content, different type of schedules and so forth. So with Money on the Streets, we've released only one video so far. It's a bit hard to get it going, because I have to go to different like sites, and sometimes they don't even allow me to record. They're telling me, okay, you need to go to the center management and this and this and this. So it's not it hasn't been as easy as I thought it was going to be. So I think for now I'm going to release one video per month for Money on the Streets. YouTube Shorts videos, we're going to have 4 different types of videos being basically released each week. So that's 60-second long videos every second day or so during the week. I think that I saw on another channel, basically the channel owner explaining that repeating themselves doesn't mean that they want to waste your time. It's because they're actually very forgetful. I'm also very forgetful in terms of the stuff that I've mentioned. So if you keep on hearing me mentioning the same thing over and over again, it's because I already forgot that I mentioned it. I know it could be like a minute ago and I would have forgotten that I've mentioned it. So I'll reiterate whatever I've said before, even though I've said it already, but it doesn't mean I want to drag and get like more watch time or whatever. It's not like that. Okay, so I have 4 different types of savings accounts that I'm going to be taking you guys through. So we're just going to be looking at the pros and cons of each type of savings account, right? These are generic definitions of these accounts. Obviously, when you go to the bank, you will have more details regarding these type of accounts. And just a mini disclaimer, I'm not a financial advisor, so I'm not advising you to take any of the savings accounts that I'm going to be taking you through. It is up to you as to which one you want to use, and it's up to you which bank you want to use it with, and then it's also up to you what purpose you're going to be using it for. So it's just going to be what I think works best, but not necessarily financial opinion, right? So the first one is the fixed account, right? So A fixed account basically can be like two different types, like there will be two distinct types, right? So fixed deposit or fixed the normal fixed account where you save a lump sum, right? You could maybe save 10,000 for X amount of months or years, right? Or you can decide that, okay, I will be saving a fixed deposit, meaning that every month for 3 years you're going to be depositing 1,000 rand each and every month. And so the thing about it is that it's very much important to always deposit that amount, otherwise there are going to be penalties that you incur and so forth. So the pros of this type of saving account is that if you're not disciplined enough, it helps you to ensure that the money remains within that specific saving account, right? And then the cons of it is that your funds are unfortunately not liquid enough for whenever you want access to them. So example of what you could use it for, let's just say you want to save up for a house, and you realize that, okay, I'm going to need a down payment for this house, and you maybe the down payment is going to be plus minus 200,000. So you decide, okay, let me save this 200,000 within a period of 3 years. Then you go to the bank and open a fixed account, because obviously a fixed account tends to have higher interest rates. So in order to benefit from this higher interest rate, you take a fixed account, right? So the cons of it, as I've mentioned in this thing, is that if you take a fixed account that will mature in 3 years, if you want to access your money, let's just say you get an increase or you get a job and you're able to save that 200,000 in like using other means before the 3 years, and you want access to that money within the 3 years, then you will be penalized. So those are some of the cons for the fixed account. And then the second account that I'm going to talk about is the short-term savings account, right? So short-term savings account do not have any notice. You have access to your money almost instantly. And the cons of this is that they usually don't have as high of an interest rate. And this is when we compare the 5 big banks. By the five big banks, I'm referring to Absa, Capitec, Standard Bank, FNB, and I did say Standard Bank and Nedbank, right? So yes, so the reason why I'm saying that I'm referring to just those 5 is that for Time Bank and African Bank, this rule does not apply, whereby these short-term savings accounts that do not require any notice whatsoever, where you can get your money instantly, you can get a very competitive interest rate with African Bank and Time Bank, right? So I'm sure some of you guys know about like the Time Bank Go Save and so forth. So that's where you can really get up to like 7% or 8% interest rate, which is unheard of before Time Bank was in the market, right? And African Bank as well. So I've basically, by just describing how they are, went through the pros and cons as well. And then the third one is the short-term to long-term notice accounts, right? So these accounts basically you have to serve some form of notice, otherwise you get penalized. If you serve the notice, you do get access to your money without any penalties, right? But depending on which bank, you might have to provide evidence to get the money. So just because it's your money and you saved it, you're not just going to give them the notice and be like, I want my money by the end of the week, because it's a 7-day notice, right? Or I want my money after 30 days or after 32 days, which is the more famous one in terms of the notice accounts. I remember I had 32 days a while back, and I wanted access to the money in the 32 days, and especially if you want it instantly, we have to provide proof that you need it at that moment, because they really encourage the people that are using those accounts to either use the notice that is given, which is 32 days, or not take it out altogether, right? So the pros is that you have basically a middle ground between the no notice and the fixed deposit, right? You're right in the middle. You can give notice within a short period of time, get your money like with a 7-day notice or 1-day notice and so forth. So as much as it's not too liquid, but you still have some level of accessibility. So the interest rate, I'd say it's between medium and high. This one, it's you usually don't get very high interest rates for this one, but as I've said, it is basically that sweet spot in terms of savings, right? And then the fourth one and the final one that I'm going to be discussing is money market accounts that you get in the bank. So these ones, you usually have to have some form of like a minimum amount that they stipulate. So it could be that they want you to deposit a minimum of 10,000 rand per month into this account to have access to it, or you have maybe about 100,000 rand, like let's just say on a lump sum that you're depositing into this account, and then you get access to very high interest rates, right? You can even get access to interest rates that are similar to like your gold saves, African bank type of interest rate, where you get plus minus 7% before the repo rate actually decrease, right? With some of these accounts like your FNB Maxima accounts, your Investec accounts, they've got a lot of these type of money market accounts that you can have access to, but they usually have some kind of requirement, as I've already mentioned. So the pros is that you have higher interest rate. The cons is that you have to have a minimum amount that's within that account, or that is deposited into that account at any specific period, right? So also I just want to cover a couple of common things that common with like all these savings account, right? So as you've noticed, I didn't mention a tax-free savings account, right? That's because a tax-free savings account can really fall under any of the type of savings account that I've mentioned, right? So there are different type of financial institutions that have various tax-free savings accounts. So it really depends on the bank that you're going with and what they want to do with that tax-free savings account. So a tax-free savings account, what differentiates it from the other accounts is that there are certain type of regulations, right, in terms of the type of product or what it can be used for. But otherwise, it then becomes like a normal savings account. It doesn't become too special in terms of just having its own set of rules, right? It's more of the type of assets that you can save into, like cash, ETFs and so forth. So another one is that whenever you're using online banking, for most of the banks, you open up a savings account using online banking, you stand a chance of getting higher interest rates than if you go to the bank and they open up that savings account for you. So do look into that option of actually using your app. I know with NetBank that is the case, but I'm not sure if all the other banks have it. But that is one of the things that you could do. You could get 1% or more than that with the method. And then what's also common is that the interest rate is usually tiered, right? By tiered, I mean that it's based on how much money you have in that account. So you'd find out that, if you have 5,000, maybe you get about 2%. If you have 25,000, you get about 3%. If you have like 50,000, then you get about 3% or 5% or something like that, right? So that's how most banks usually do it. So basically, based on all those accounts that I've mentioned, you have to decide which one works best for you and which one will make sense for the type of saving goals or financial goals that you have, right, that require savings accounts. So yes, I hope you've learned something and you will take the right financial product when the time comes, so that you are better informed and you make the best decision for your savings journey. So thank you very much. I hope you enjoyed the episode, and go on and make good financial decisions. Thank you, beloved. Love you.